Hey everybody, I'm Phil Town.
And this is Danielle Town.
And welcome to the Invested Podcast. Yeah, you guys know what we do. We are on podcast number 491 today. This is about, 8 years of this? As we're running toward the end of 2024.
It's crazy. We're getting there to 500.
Yeah, lots to talk about when you start talking about how to invest and how to invest the way, the really great investors of the world do it. Where I keep being amazed when I hear Warren Buffett talk about, when he's really being candid about how smart you have to be to do this kind of investing. He really does insist that it is not about IQ. That is absolutely not about IQ. So if it's not about being really smart, because other forms of investing say, strategies of investing in stocks that I'm aware of require a lot of IQ. They really do, where you are constantly trading. And I'm thinking of the Renaissance kind of company, where they're compounding money at 70% a year.
Where their job is not actually investing, it's making great software.
Great bets. No. They're making. Well, okay, yeah, you're right.
Those are the guys who are doing it off of AI and computer programming.
Yeah, you're right. They absolutely are rocket scientists with huge IQs, figuring out algorithms that will sort through all of this tremendous amount of data they collect and find pricing anomalies that they then put money on for a matter of days. And they're so good at it. They've compounded money for at least 20 years at over 70% a year. And
7-0?
7-0. Yeah.
That's their record?
Yeah, absolutely.
I didn't know that.
Jim Simons, who formed it, just recently died. But they are literally rocket scientists. I mean, we've talked about this. Jeff Bezos used to work there and asked permission to go start Amazon. And they said, sure. I mean, they
Jeff
had come
Bezos
across
worked at Renaissance?
Yeah,
I didn't
absolutely.
know that.
And he was a rocket scientist, and hey, who knew? So yeah, they came across this idea that they were looking at of kind of looking at the book market as something that's going to be disrupted. Maybe they could figure out how to invest in it. And Bezos decided he would go disrupt it. And so he asked permission, and they said, sure, take it, yours, go ahead. No interest in it at all.
Cool.
And they went on to make 70% a year, and Jeff went on to create Amazon. I'm not sure he made 70% a year. I think he probably did.
He was doing okay.
But that requires that kind of investing where you're really trading on information relatively short term, if not very short term. That requires an enormous amount of brain power. It absolutely does. And what distinguishes the kind of investing that we do is not brain power, thank God. What it is a discipline that you put on yourself and a willingness to separate your emotions from the crowd, which is
what do you
actually
think
hard to do.
Makes it not about brain power?
Oh, well, particularly for the small investor, right? I mean, let me say this: the more money you have, the more difficult it is to move the needle when you buy into a new investment. If I with my fund, if I buy into an investment that's say we put 10, let's see what would be a typical, say $20 million into something, I can own a fraction of 1% of that company. And if that company doubles in value over the next 3 years, my 20 million goes to 40 million. That does move the needle on a 9-figure fund. That will move the needle. You'll see the return change in the overall fund. If Warren Buffett were to do that, buy a $20 million company or a $20 million investment, and it doubled over 3 years to 40 million, it would be like a 4-0 rounding error level of result.
How does that relate to brain power?
Well, because the more money you have, the harder it is to find businesses big enough to move the needle that are actually on sale. So you really have to be either enormously patient and wait for the big whales, like an Apple, to go on sale over something. And when they do, you still have to have the ability to distinguish whether that is a terminal problem that put it on sale or whether it's a temporary problem that put it on sale, which is, it just requires, well, I guess, now that I think about it, it may not require any more brain power, literally. It just requires a lot more discipline. You got to wait a lot longer.
Yeah, I'm just trying to figure out what you're talking about because
Oh, thanks.
it's not different.
Good to know.
So
It just
How-
seems to me that it's a lot harder.
So maybe the difference then, because what you're
Okay.
talking about is you need to find larger companies
Yeah, it's
that
harder,
you can
not because
buy
it's
a
harder.
decent amount of.
It's harder
and-
not be. Well, let me finish. That it's harder because in order to find a whale that will move the needle for Berkshire Hathaway, either you have to be incredibly patient and wait for some catastrophic change in the whole marketplace, which could happen, and I think will happen, or you have to expand your knowledge. You have to expand your circle of competence to include more and more things so that you can pick off the random company that does go on sale without a catastrophic market event. And I would put up for an example that Warren has never invested in technology and then invested in Apple. And he talks about it pretty casually, like, yeah, I just talked to a friend of mine and he said that he'd rather get rid of his private jet than his iPhone. And, that was enough for me. I'm in. I think it's quite a lot more than that, particularly because he is now mostly out, which is also very different than what he strongly recommends.
Is he mostly out? I knew
Yeah,
he sold a bunch, but still held quite a large percentage, I thought.
He does have still a large percentage in his portfolio.
Like of Apple, I mean.
Yeah,
Not
he still
compared to
does.
Berkshire, yeah.
But he's sold off, I think, 75% of his position so far.
75%.
Ballpark, yeah.
Oh yeah. That's
Yeah,
serious.
That's a big deal.
Yeah.
So here's a guy who's looking at Apple now and saying, I can do better with my money than this over the next 10 years.
You know what
if
I
I
love
just
about
wait.
that? As an aside from the brain power conversation, which I'm still confused about.
Coming back to brain power in a minute, though.
Coming back to it in a minute. What I love about that is that he multiple times referenced Apple as being one of the companies Berkshire would hold forever. It was an American Express, it was a Coca-Cola, it was a See's candy. Very different. And so what I really appreciate about that is just how little he cares about what anybody thinks. Because somebody else would say to themselves, oh, I talked about this publicly over and over. Wow, this is like really... And maybe he did have those thoughts and then did it anyway, but I don't think so. I think he probably was just like, nope, change of situation. Let's move forward. I don't care. Got to
Yeah.
do the right thing by my investors. The end.
Yeah.
Like, it's such a good lesson. Like, change your mind. It's okay. Change your mind. It doesn't
Yeah.
diminish anybody.
Yeah, exactly. I mean, it's a big deal. I'm just checking on the actual percentage right now, and I see that he sold about 2/3, not 3/4. Although as of the last time, I think they're still selling. So
I
they're
mean,
still,
they've been selling every quarter, so
yeah,
they might
I think
be.
they're still selling. So they're out. They originally, at the end of 2023, they owned over 900 million shares, and they're down to 300 million as of November. So I think, when this comes out, in February, the new 13Fs will come out, and we'll know what the new position is. But if they continue to sell, they're probably down to a quarter of the position. So that's a big deal. That's Buffett.
That's a big
being-
deal.
Yeah. Yeah, you don't hold forever. That's the ideal, is you hold forever. But if you start looking at a company and you see that they are going to be trapped in part by the China problem, right? I mean, Apple is sitting there with a ton of its manufacturing in China, and they've been trying to move Foxconn's capabilities out of China into America. The U.S. just does not have
For the
the
chips, right?
yeah, and we don't have the people that can do it in America at the level that Apple needs it done. So they're a little bit trapped in China. And what happens if China gets to a point where it says, "Okay, we promised we're going to take back Taiwan, and now we're going to do it,"
Yeah.
right?
I think we got a nice little preview of China not being accessible to us during the pandemic. And it was, I don't know if catastrophic is quite the right word, but if it hadn't changed, it would have been.
Well, they seem more and more. There's a consensus that the virus was actually released out of the Wuhan lab, and
Well, we don't know that, but yeah.
we don't know,
there's,
but more and
a lot
more.
of talk. But who cares?
Put it like this. Put it like
You
this.
know?
Well, we do care for one reason, and that is that it was deemed by the U.S. government to be disinformation to such a significant extent that they blocked people and threw them off of Twitter for saying that this
The
is
U.S.
coming from the
government
Wuhan
didn't
lab.
block anybody or throw anybody off of Twitter because it was a company that made its own decisions.
Oh,
not government.
my. You are such a...
That like
waif.
literally is correct.
That is literally correct.
Yes.
You're right. But it is
Good.
not correct. The FBI got a hold of Facebook and
It's
Twitter
very possible,
and said,
but the government
you
did
need
not
to
throw
do
anybody
this.
off.
Right. And suddenly, these things were deemed misinformation by supposedly disinterested parties,
Maybe.
and they were thrown
And
off.
I mean, also, information
So, yeah, it is
changes.
interesting.
So maybe at that time that they thought that was totally nuts, and maybe now they think it isn't. I don't know. So
Yeah.
the point
Okay.
is, what happened with that situation is that we discovered, one, reliance on China and other countries. Two, transportation. A huge problem after COVID was not even that they were not create. They were often be able to create the things that were being created in the various factories, but they couldn't get it across the ocean.
Right.
So
Yeah. So
I
big
think
problems
that that's the other
sitting
like
in China.
big. If I were writing a risk category, those are two that I would definitely.
Yeah, and so look
include.
what Trump is promising to do, like big tariffs on anything coming out of China. What will that do to Apple,
Yeah, exactly.
right? What will that do to Apple?
But I want to hear
So-
about the brain power part of this because I'm not sure I see that it takes more brain power when you have more money.
Yeah. Well, I just think that it does in the sense that you have to have a lot broader net in order to find the occasional company that goes on sale and is a big enough acquisition to move the needle on your entire, $300 billion cash stash, which, by the way, is now up to about $330 billion for Buffett, which is a giant warning to any of you out there that are sitting complacently at home with your money, long-term invested in the S&P 500, and you think that that's just going to be continuing to do well. I don't know how you could be complacent about this if one of the smartest investors in the world for long-term investing is pulling money out of major investments that he has never pulled money out of, setting up more cash than he's ever had on almost an order of magnitude over previous history, and you're sitting at home going, oh yeah, it's fine, everything's good. No, everything's not good.
So if
Things are
somebody
going to happen.
is feeling like they don't have enough brain power, and it's only going to get harder as you are successful and have more money, why start?
What?
I don't know. I'm intrigued by this.
What? Okay, you've got $10,000 and you're 40 years old. You're saying, oh, this is going to get so much harder if I have $10 million. Why start? Is that what you're saying, really?
Yeah, that's a bad thing to think. I agree.
Thank you. Oh my God. You agreed with me right off the bat. This is a miracle.
But
All right. So,
I don't know. It's just so weird to me that you're saying like it doesn't require much brain power, but then as you become more successful, it requires more. I guess the reason I'm reacting is that I feel like it does take a good amount of brain power. And I sometimes like get a little annoyed when Buffett talks a lot about how it really doesn't, because I think it's easy for him, and that doesn't mean it's easy for, I'll just talk about myself. It doesn't mean it's easy for me. So especially
you're 8
with
years. Wait. You are 8 years into a podcast about learning how to invest, and your basic take on it is that it's still really hard.
No, I don't think it's really hard. I think how many times have we parsed these words? It's simple but not easy, or it's easy but not simple. However, we always end up saying it.
But when I say it's not easy, I mean you actually have to do work. I don't mean you have to have a high IQ. In other words, calculus isn't easy for somebody with a low IQ. But this isn't calculus. This is just basic math. And, 2 + 2 is 4 can be done by almost anybody.
Yeah, sure.
So this is that. But it means you have to work. You do have to work.
You do have to work. Yeah. And the work means put your mind to it. Learn something you don't know. Sort out when you're wrong. Develop your own methods, systems, checklists, etc. So,
well, you have to just understand the business. That's all. You have to be smart enough to understand Chipotle Mexican Grill makes burritos and has a business structure, a franchise, if you will, that is very good at preventing competition from coming after them.
Mm-hmm.
That's what you have to understand.
So
you have to understand that about
change
Walmart.
If you're investing $10 million compared to $10,000.
It doesn't. The problem is that the big companies like a Walmart or a Chipotle don't go on sale very often. And so for a big investor like Warren Buffett, he's said multiple times that if he only had $1 million, he could be making a 50% per year rate of return. Because why? Because all of a sudden a whole world of investments are opening up to him that will move the needle on $1 million if they double. That wouldn't do anything to a $500-600 billion portfolio.
Yeah, absolutely.
So there you go. That's the main thing.
It's
so
so you're saying it's the looking for the little hidden ones when,
or just
when it's
smaller,
tough.
Just absolutely smaller stuff. Like, I'll give you an example. We put money in Sprouts Farmers Markets. Sprouts wasn't a really big company when we started into this thing. I think it was a little over $1 billion.
Mm-hmm.
Okay, well, if Warren Buffett invests in something that the whole market cap is $1 billion and it doubles to $2 billion in 3 years, he's made $1 billion, but his portfolio is $600 billion. So he has made 1 divided by 600 billion rate of return, which last time I checked is a rounding error. Okay?
Yeah.
So
it's rough.
whereas if we bought that company for $1 billion, it would be a huge thing, right?
Yeah.
We would make this massive return and we'd be so amazed. So that kind of investment, there's just so many more of those than there are these giant whales like an Apple. And so that makes it easier. It's not, and it makes it less intellectual. You don't have to know as much before you're going to find things that are in your sort of circle of competence that you've built. Now, this is where I totally agree with you. This is not easy. You have to build your circle, or you have to dig sometimes I call it like you have to dig your canyon.
Yeah. Or like we were talking about last time with the medical devices company, like you have to be interested enough to go learn it.
Yeah.
It's probably learnable. Go learn it.
Yeah. And then when I took a look at that thing, they've got this business, they got that business, they got this business, they got that business. And I'm thinking, wow, that is really different than Chipotle having a burrito or a burrito bowl. I mean, I can understand a burrito bowl versus a burrito, and okay.
And where they put their stores and whether or not they're going to start offering an online ordering
Yeah.
situation, and will it be a drive-through or will it be a carry-out? Ooh, big decision.
Right. I can do things. I could go to one and see how that works.
And talk to
Right.
people. Yeah.
Yeah, and talk to people. I can go to an Urban Outfitters in the year 2000 and, oh my God, there's lines around the store. What's going on here? Right? And you
Yeah.
go to the same place 20 years later and there's no lines anywhere. What's going on now? So, you know, the level of intellectual capability that you have to have is, I think, quite a lot lower when you don't have a lot of money. And moving the needle is relatively easy, as Buffett said. And as we joke, it's like, okay, if Buffett has an IQ of 160 and he can make 50% a year and you've got an IQ of 80, you should be able to make 25. Do you get it?
Yeah.
It's math. Okay. Kidding, of course.
I gave it the appropriate level of.
I think it's such a good joke. So,
Yeah,
to that
okay,
point.
I take that. I think that does make sense. Maybe it does get a bit harder as you get more successful. And then you're more successful, so who cares? Nobody has sympathy.
Yeah. So, okay, and now, in perhaps complete contradiction to my whole point, I wanted to talk a little bit about Google, which is a whale, a giant whale.
Having some uncertainty.
Yeah, and this is a business that, if Buffett thought he comfortably understood it and it was on sale, is certainly big enough for it to move the needle at Berkshire. So this is a $2.1 trillion business in terms of market cap right now. But a judge has just come out recently. I just wanted to talk about this real briefly because of the impact on this business could have a rolling effect on a number of technology companies. Which, if you're invested in these big technology, you know, the big 7 technology giants, then you may be impacted by this in a very, very important way.
Yeah, and I would think a lot of people I don't own Google, but I would think a lot of people listening own Google. It's just so common in so many portfolios. So people are wondering.
It is by all accounts a monopoly. And that's the problem. It is a monopoly. So if you ever wondered, how would I know if this business is really a good business? If it's a monopoly, that would be a clue. It's the only.
It's one of the moats.
One of the moats. The toll bridge
it's
moat.
in the list.
Yep. So if you look at what's going on out there politically, what you're seeing is that under the Biden administration, a activist head of the FCC, I guess it's FCC, FDA, one of them, one of the F words, Lena Khan, became very active in prohibiting mergers between relatively large, impactful businesses. So she's directly prevented over 30 mergers from occurring by her account. Either mergers that never happened once they realized what she was doing, or mergers that were abandoned once she attacked them, or mergers that were stopped in court. And she's only lost a couple of those, and the whole rest of them are just changes to the marketplace that are very substantial. And when Trump got elected,
I'm just not saying anything because I have no idea. I haven't. Looked
I'm just kind of giving you some background about what's going on.
So it sounds
out
like
there.
she's an attorney, probably.
Yeah, and she has an axe to grind, and that is that these companies are globalist in nature. They're not necessarily focused on nationalism, on making America better. They're focused on building a better, bigger company, and she thinks that that's in a kind of way of it's an anti-competitive behavior that prevents other companies from rising up that could come up with better technologies and so on.
This case, though, against Google was started in the Trump administration.
Yeah, it likely was. I don't remember when they started it because it's been sued so many times.
'Cause
I
I
don't know if
just
this is the
checked-
continuing case.
I just checked it out when you mentioned, and it said something like people were unsure what would happen on the government side once the presidency changes over, because this case was brought under the Trump administration, but now maybe they're having a different view on it.
No, I don't. I think that would be naive, actually, since J.D. Vance is a big fan.
No,
of
it was
Lina
it was
Khan.
just saying they weren't sure what was going to happen.
Yeah, they shouldn't be, because again, J.D. Vance, vice president elect, is a big fan of Lina Khan. He wants to bust these guys up, and was happy to see her prevent mergers, and wants to see these big corporations stop being so much of control of their markets. So I don't know what the Trump administration is going to do, and I don't think anybody else does either.
No, they haven't.
with
They haven't
regard.
talked about it apparently. But what I thought was so interesting was that, to your point about how it's one of the moats to look for a monopoly, the description of what Google was doing in its monopolistic practices was to make deals to make sure that its Chrome browser and its search was the default search and the default browser on XYZ appliances, softwares, etc.
Yeah.
And it's of course you would. If they didn't do that,
Well,
they would be missing a huge opportunity. Of course that's what they're doing.
By
It's
way
their
of
literal
example-
job.
By way of example, they're paying Apple, what is it, 20 billion a year? It might be 50 billion a year. They're paying them some enormous billions of dollars to be the default search engine on Apple. And this judge just ruled that they can't do that.
Yeah.
Now,
So what I find
what's gonna
fascinating
happen?
about that is that businesses are going to push and push and push and push and essentially try to become a monopoly, because that is their raison d'etre. That is why they exist. We
Right.
want to take over we want to have the most market share possible, and the most market share possible is 100%.
Right.
So I don't know, I guess I'm saying I don't think that Google's doing anything terrible here, but I also agree that it's monopolistic practices. So
Well, let's continue with the
Let's
problem.
move forward.
The problem is that as these companies become gigantic, they have enormous cash flows coming in that allow them to do things that competitive companies can't do.
exactly.
In particular, buy up everything that looks competitive, and buy up everything that's even tangentially competitive.
Yep.
So
and they can
you have-
operate divisions at a loss so that they can put any competitors in those smaller areas out of business.
Which, I mean, you got to think that's not fair competition.
Oh, I know.
I mean, that just
but
seems
it's
wrong
literally
on the
how
surface,
Amazon became successful.
right? Literally, and continues
And
to do
continues.
that.
That's true.
And you just go, is it right that Amazon puts, all these other companies out of business who are also big companies? Yeah, let's say Best Buy, for example. Really pushing Best Buy to the edge of bankruptcy and beyond, and doing it at a loss. I mean,
Exactly.
that just sounds like anti-market behavior to me.
It sounds
So-
anti-market. It sounds evil. It sounds wrong. And yet, this is where there's kind of that, as a lawyer, it's this beautiful tension of how much does the free market need to be free? Because it does. And at what point would a government step in and say, no, you can't do this? This is not right
and
anymore.
part of the
and it's
argument
actually
from
harming
Amazon's-
the market that we want to have in our country.
Yeah, but
So that's where
Amazon comes back in
these
with
things
its
go back
own
and forth.
argument for this and says, yes, we are hammering these businesses because we can undercut their prices, and now we can deliver it in one day, which is even easier than going shopping.
And it's better for
But-
consumers, et cetera,
but-
et cetera.
But we are also a platform for small businesses in the middle of nowhere, Alabama, to get into business and sell their goods in a way that was absolutely impossible 10, 15 years ago. You couldn't have done it. So we are a boon to entrepreneurship. We are a boon in particular to small entrepreneurs who couldn't compete otherwise. And then, of course, the argument back is, yes, and every time somebody comes up with an interesting market that gets big enough, you wipe them out by putting in your own product out to compete with them.
Yes.
And that's evil. So
Yes.
you've got this war going on.
So this is why, just for people who are looking for a black and white, this is why it's not black and white, these monopoly cases. They're almost always gray. And it's a really interesting area of law and free market capitalism. How do you create a situation where the free market can thrive as much as possible? And that's what it's about.
Well, let's take a look at what's going on with Google. Not that we have a crystal ball about whether they are going to force Google to sell off Chrome, if they'll succeed in forcing Google to stop its deals where it becomes the best or becomes the preferred search engine on all of these platforms. Let's say that they just do. Let's just say they decide that they are going to break up these tech titans back into the discrete competitive groups that they started with.
Like they did with Microsoft, by the way. We have a precedent for what this looks like.
So in that case, I think Google has like 6 or 7 different categories. So we're just going to play with this a little bit.
Can I just ask a question first? So when you told me about this before we started recording, my first thought was, okay, this is applicable to any company in which there's something happening that is extremely uncertain. It might be fine. It might be catastrophic.
Great
but
point.
I don't know which one it is yet. So as an owner, how would you recommend that one handle that? Like, is that something to be like, okay, I need to like get all over this and try to understand it, even though no matter how much I understand it, still nobody's going to know what the outcome is? Or is it just kind of like chill and ride it along? Or you could do what you did, which I actually thought was really interesting. So go ahead.
Well, yeah, I think the answer is you need to understand the business or you shouldn't be in it in the first place. And then since you already understand the business, it would be a relatively easy step to understand, let's say, worst case scenarios, right? So worst case scenarios for Google would be a split into, let's say, 7 different businesses, which are to a certain degree unrelated.
So you would spend enough time on it to the point of gaming out various outcomes.
Yep.
Okay.
And see if you're in a position where those outcomes would present a real negative impact on your investment.
Cool. Okay.
All right. So right now we start with what is Google's value in the market? We don't, or I should say price, right? It doesn't reflect value. It's just price. And right now they're at $2.1 trillion at $172 a share. So they're right up at the top of the range of their pricing. And we would want to understand, if they break this company up, is it going to be worth more split up or less split up? In other words, they sell it all off. Which way is it going to go here?
Oof, good point. I
Right?
hadn't thought about a benefit to it. That rings my bells of back when, who was it? It was a car company and they spun off
Yeah, Fiat.
Corvette or
Chrysler.
something.
They spun off Ferrari.
Ferrari. They spun off Ferrari, exactly.
And
it
Ferrari
was a
became worth
huge opportunity because basically once they separated those companies, the first one just pretty much stayed at its same stock price and the second one popped up. And so you basically almost doubled within like a couple of weeks. Like it was just crazy.
Yeah, and ultimately, if you had hung on to Ferrari, you would be like maybe just Ferrari by itself 10 times what you paid for the entire company all the way back.
Yeah.
then.
Yeah. And the thing is, as it was happening, I think we talked about it on a podcast maybe, or I don't know, maybe we talked about it separately. It was the math was mathing. Like it was there before
Yeah,
it happened. It
completely
was
there.
clear what was going to happen. Yeah, it was so
Absolutely.
interesting.
Absolutely. Yeah, Monesh Prabrai goes into this a bit if you want to try to track down the YouTube videos. I think he's out there
Oh,
with
maybe
it,
that's why I remember talking about it. Yeah.
where he was basically saying, look, you can get Ferrari for free and you're owning the rest of Fiat Chrysler for like one times
That's what it was.
earnings.
Fiat Chrysler. Yeah, yeah, yeah.
You know, and then
Right.
it's just ridiculous PE ratio on the rest of it. Or I probably have one times earnings wrong, but basically a year or two of earnings and you get the thing paid off.
Yeah.
And that turned out to be absolutely predicted. And so, yeah, if we look at Google, we would love to see that our worst case breaking up the company is way better than 2.1 trillion. That would be sweet. Unfortunately, it probably isn't. Just going out there on a couple of AI platforms, Google's own platform, which, by the way, is now baked into the Google search. It's automatic. You just do a Google search in the regular Google search window, or box rather, and it does an AI analysis for you and spits out an AI answer before all of the links that it would also come up with. So Google is stepping up its AI game big time.
That hasn't happened to me. Wait, you put in like it hasn't happened to me. You put in like a question. Oh, maybe
'cause
this
you
is
live
one
in
of our
Switzerland.
country differences. Yeah. Switzerland's like,
Right?
no.
It's not there yet. Yeah, so I did that with Perplexity, which I like, but actually didn't do as well, I think, in this question than Google did. Maybe not surprisingly, since I'm asking Google's AI engine to split up the pieces of Google and tell me what they're worth.
Wouldn't it be
And
funny if Google's AI engine is biased towards Google?
Wouldn't it be? But as it turns out, if they are, that's not good news.
Exactly. That's why
for the
it's
split up.
a bit of gallows humor of like, okay, what are you being fed? It all depends on your information that they feed it,
Exactly.
right?
So, in case you didn't know, Google has these major categories: the search engine, which is the vast majority of its revenues; YouTube, which is growing as a streaming engine, amazingly and extremely competitive, actually, with Netflix. Then you have Gmail and Maps and Google Play and all of those Google apps, Google Drive, Google everything. Cloud, which is the competitor of AWS, right, over at Amazon, which is all your cloud storage, which is also growing like a weed. Chrome, which is the online website
Browser.
or whatever you call
The
that.
web browser.
Yeah, web browser, right? And then you have just in general all the hardware stuff that they do, which isn't worth a ton. But if we were to go down through that, the search engine is worth about $1 trillion, according to Google AI, of the 2.1 trillion. So it's worth about half, just the search thing. YouTube, almost 500 billion. So between YouTube and the search, you're almost there. Now, unfortunately, Gmail, Maps, all the Google goodies, that's maybe 350 billion. Android, the whole Android operating system, maybe 100 billion. Cloud is maybe 200 billion.
And this is from an AI answer that you got.
Yeah, from an AI
Just to be
answer.
very clear for anybody, this is not you saying this. I
So
don't want
it
anybody
could
going
be-
off and citing you.
Yeah, so it could be hallucinating this, right? I rather think it was pointing to a lot of data providers that, in other words, it's going out there and looking at what analysts are saying about the potential breakup. So it's kind of a shortcut of doing compared to doing my own work on it here. But altogether, this whole thing is about 2.2 trillion. Selling in the market right now for 2.1 trillion. So if this is an optimistic view of things, then you're not going to have a terrible, well, if it's an optimistic view, you don't have a lot of upside to the where it's at right now as a total combined company. And if it's an optimistic view and it's wrong, you've got some downside there. So the uncertainty remains with just doing this much work on it. It's kind of like, okay, well, where are we really at here? Would really, if they spun off YouTube, would it only go for $455 billion? Or would somebody step up and just pay up gigantically to get in the game, right? Somebody like an Apple, perhaps. If you spun off Android, which is growing like a weed, why is it only worth 100 billion? Why, if it's growing at 25% per year, surely it's worth more. So there's a lot of work here to do this, and you may discover that you could come up to 3 trillion or even 4 trillion, that the upside of breaking this company up might be very, very big. Here's what I kind of doubt. I doubt that the downside is substantially below the market cap. And the reason I doubt that, Danielle, is because this is broadly understood news. The uncertainty is there about where this is going to go all through the market, and the price is not going down.
It did, though. It dropped a ton in August after this decision. Okay. Then it came back up.
Well, there's the
down
thing,
like
right?
25%, you know? I mean, which would have been a great opportunity, by the way, for anybody looking at Google.
Yeah, but I mean, it's gone from 190.
It's based off of uncertainty.
190 to 170 right now with a bottom at 150 something. So, right, with all the uncertainty out there, this price has recovered substantially and would reflect a pretty high degree of confidence in Mr. Market that this thing split up is going to be worth every bit of 2.1 trillion. So, there you go. I don't know where this is going to go, except that if they did it, I don't think there's a big downside in owning Google. And by the way, full disclosure, I own Google. So I'm sort of talking up my book here. But the other big issue is that if they do this to Google, here comes the same thing at Meta, right? Splitting off Instagram for sure.
That's the whole thing.
Right? And then here it goes to Amazon. You're going to be pushing back on Amazon because of these unfairness practices. So
and
we
then
may
I think
see.
The other thing people are worried about specifically with Google is if the remedy is actually not just sell off Chrome or something isolated like that. If it's actually you have to separate the search from all of these products, that's going to fundamentally change Google's business.
Yeah, it would, because search would have to pay whoever owns cloud. It's like, I mean, that's where all of the data resides, is over there.
Not only would they have to pay, but they would be open to other better competitors, which is the whole point.
So, and then you have to ask, why is that the point? Why do you want more competitors for something that's free?
Because it could be better.
Maybe it could be better. I don't know. It's going to be real interesting to see. You know, you've got part of the world out there in America wanting less and less government interference. You got part of the world wanting more and more government interference, but of a certain type. And then you got part of the world wanting regular government interference, the status quo. Lord, I don't know where this is going to go.
I don't know. This has been a long time coming.
Yeah.
And I think there's a lot longer highway ahead of as you said, other companies, other cases against the same. There's even another Google case going on right now that hasn't been ruled on. Like, there's just a lot to come. And I think part of that is that we're just dealing with so much uncertainty ourselves, like as a culture who uses technology, of how we want this technology to be available to us. And so I think that's part of the, we don't really know what we want out of this.
Yeah, it's
exactly.
Really true. Everybody loves the convenience and everybody hates what it does to kids and all that. So,
exactly.
Yeah.
So I think that's part of the confusion. But I think from an investor, as somebody who is invested in a company, the process of what to do when something like this happens is key. Having a game plan. I think sort of sorting out what could happen in the worst case scenario is a good idea.
Yeah. To
summarize
how much
time it takes.
Obviously be sure you understand a business before you buy into it, because when this sort of thing happens, you don't want to be sitting there going, oh my God, what have I just done to my retirement portfolio? and be living in fear and not being able to sleep at night because you don't know what this all means.
Well,
If
that's
you
what I'm
understand the
saying, yeah.
business, you will understand what this means and you will not have a problem figuring out what to do. So that's the key. Even with something as complex or technology driven as Google, it's not that hard if you understand the business. Not any harder than looking at burrito business once you understand it. So
Once you understand. Okay.
with that, I think it's time to go play. What do you think?
I think so. Thanks, everybody.
Let's do. All right, honey. Love you.
Love
See you later.
Bye.
Bye. Hi guys, thanks for listening to Invested. If you enjoyed this episode and you want more information or to listen to additional episodes, visit our website at investedpodcast.com and sign up for my virtual workshop right there. Spots are definitely limited for this event. I'm not kidding, they really are. They sell out very quickly. So everything discussed on this podcast, by the way, is either my opinion or it's Danielle's opinion. And really important, it's not to be taken as investing advice because I am not your financial advisor, nor have I considered your personal situation as your fiduciary. So remember that. You're on your own here. This podcast is for your entertainment and education only, and I really hope you enjoyed it.